Welcome back. And today I have a very special guest for you. His name is Frank Rekas. If you don't know him, you should know him, especially if you are based in Florida or nationwide and you are worried about your money and you are an attorney. So Frank is a partner with Palm Wealth Partners, and he works predominantly with solo attorneys, with law firms, helping them to multiply their wealth, but also preserve their wealth. Welcome, Frank.
Thank you for having me, Anna. Been looking forward to this.
Well, everyone's looking forward to this until they get on the podcast and they start asking them difficult questions. So we'll see how it goes. But welcome. Right. Let's jump right into it. Frank, law firm owners write massive checks to the IRS every year. Give us the blunt truth. How much money do small business owners overpay in taxes because their accountant files forms instead of planning strategy?
That's a really, really good question. And this answer is not a blanket answer for everybody, but it can range anywhere from $30,000 to $50,000 to $75,000 a year in overpayment on taxes. And it's mostly from poor planning or no planning.
That's a lot of money to lose. I started thinking 10 handbags and a couple of pairs of shoes. Many lawyers and entrepreneurs say, my CPA handles my taxes. And I do too, actually. But you say many still overpay, even though they may have an amazing CPA. So what does a good tax strategy include that a normal average CPA never brings up?
Well, it's interesting you say that. I had a networking meeting this morning and we had a CPA in the room and they talk about being a proactive planner. It's not just showing up in March and asking for the client's receipts and documents and then 3 weeks later, maybe, turning around and saying, okay, Anna, you owe $42,500, write the check by April 15th. That's not planning. That's tax reporting. You want someone that's proactive, that's going to meet with you throughout the year, quarterly, sometimes monthly if the business is that active. But you want to be in contact with your client on a regular basis by having the right advisors helping you plan, not just pay.
Well, I'm still stuck on the previous question because I'm worried about shoes and handbags. So let's kind of specify it a little bit more. So let's say I'm a law firm owner. Maybe I have a couple of paralegals, I have a family law firm, and I make $1 million in revenue and maybe $400,000 in profit a year. How much tax do you think they usually waste? Can you just give me some real numbers? People really want to know what sits on the table.
Well, it starts first with what kind of corporation do you have? Are you an S Corp or how are you operating your corporation? So that's one area. And that's between the law firm owner and the CPA to decide, right? Are you paying yourself W-2 income or not? And at $400,000 of profit, you should be. You should probably be paying close to $150,000 a year in W-2 income because at $400,000, you're going to pay all the self-employment tax. So that's the second thing. The third thing is, what kind of retirement plan do you have? If you even have a retirement plan, is it set up correctly? That's an area that I see all the time. Yes, I've got a 401k. How much are you putting away? Well, I'm only putting away $8,000 a year. How come? Well, my employees don't participate. There's a reason why your employees aren't participating. Education, they don't know about it. No one's taught them how to do it. No one's told them what the tax savings can be. You could be missing $25,000, $30,000 a year. Multiply that by 10, that's $300,000. It's a lot of purses, right? A lot of handbags, a lot of shoes, a lot of money that you're giving away that you shouldn't be.
Yeah, no, absolutely. I also feel sometimes business owners hear tax strategy and kind of they immediately think of shady loopholes. But what legal, non-shady strategies do wealthy business owners use every year that smaller firms often ignore?
So if you're making good money, in your example of someone making $1 million of revenue, $400,000 of actual profit is a very, very good example. That's pretty much in the wheelhouse of a lot of the people that we deal with that are solo practitioners, or some that have, 8 to 10, 12 people in the firm. There's something you can do on top of your retirement plan, which is a profit sharing plan, right? So you're going to pay yourself a percentage of the profit to yourself, as well as to any employees that you may have with the company. That's a discretionary number. You don't have to do it every year. On top of that, there's what's called a defined benefit plan, where a law firm owner or a business owner can put away up to 6 figures a year in this retirement plan above and beyond their 401k and their profit sharing. So if I can give a quick example, we've been working with someone for about 10 years. With that one move into the defined benefit plan, we've been able to save them about $50,000 every year. And this person has accumulated about $1.6 million of retirement funds just by doing one thing every year.
Okay, now my thinking shifted. I don't have a retirement plan, a formal one. So now I'm worried not just about shoes and handbags, but about leaving a lot of money on the table. Okay, reality check. I also saw, I know you a little bit, I saw on social media you call yourself the wealth guardian, which sounds like a Marvel character. I'm a huge Marvel fan. What
Yeah.
threats attack successful business owners' wealth without them noticing?
Well, one thing is disability, being sick or injured and not being able to work. Imagine you're that attorney that's making $400,000 a year, and now you can't go to work because of an injury, because of an illness. What are you going to do for money? You use up your savings? You can start borrowing from your 401k? You can't borrow from a bank because you're not working. How are you going to get money? So as part of protecting your income, we institute insurance, which is called disability insurance. I don't like the word disability insurance because it has a certain connotation. I'd rather call it income protection. But you can lose 10 years of savings in a year because of a disability. That's probably the first thing that you can take a look at where somebody can have their wealth really hurt, and really suffering because of no income.
Yeah, no, absolutely. And I think what I see amongst my friends who are mostly small to medium-sized business owners is that many business owners focus on revenue and actually ignore wealth, which is not the same thing. What financial mistakes do you see from business owners who earn great money but build zero long-term wealth?
It's interesting you say that. I have a video that I'm probably going to put on LinkedIn, maybe today, maybe over the weekend or Monday. But a lot of people don't want to be what we call financially undressed. And what I mean by that is you're making good money, 400,000, 500,000, $1 million of revenue, but behind the curtain, you haven't done anything. You have very little in savings. You don't have a retirement plan set up, or you do, but you're really not contributing to it. The biggest problem with that is that what I see is, at least the attorneys and the people that I have dealt with in the past, their past history is they never took the time to talk to someone to see how to set themselves up. They procrastinate. They wait for the right time. There's never a right time. The best time to do it was last Thursday, which was yesterday. The next best time to do it is today, which is Friday. Stop putting it off. That, I think, is the biggest hurdle that people need to overcome. And I get it. You're busy running a firm, trying cases, running your practice, research, whatever it is. You have to make time for yourself and make time for your finances, and you have to track your numbers. Great revenue doesn't mean great wealth.
So I think another challenge is a lifestyle creep. So let's talk about lifestyle creeps. Let's say a lawyer, they make more money, buy a bigger house, nicer car, go on better vacations. 5 years pass by and they still feel broke. What financial discipline separates wealthy business owners or law firm owners from high earners who still struggle?
You said a key word there, discipline. And it's creating good habits. And if whatever you can do to automate, this way you don't miss it, you don't see it. So set yourself up for automatic contributions, automatic payments, automatic savings plans. And look, trying to keep up with your neighbors or your partners or the other people in the legal space, Anna just bought a Cadillac. Now I need a Cadillac. Anna just bought a $1.5 million house. I better buy a $1.5 million house. At the end of the day, Anna doesn't really care what I do. And I don't really should be bothered with what she's doing. I have to do what's right for me and for my family. And the lifestyle creep is very, very prevalent. And you have to be careful. And that's where budgeting comes in. And I don't mean budgeting with handcuffs, budgeting with guardrails. Know what your expenses are. Know where the money's going. Again, great revenue, but nothing to show for it. That's a problem. And unfortunately, I see that a lot.
Actually, it's very interesting because I moved here from New York, but originally from Europe. And in Europe, even credit cards are not very popular. So we buy what we can afford to buy. So debt is very minimal. You might have some student loans, but that's pretty much it. And maybe mortgage, but only about 10% of people own a house. So we are kind of a rentals nation in Germany. Here it's very different than living in Boca. I'm always surprised. I live next to a Lotus resort, and then next door it's also the 7 Bridges. And I know luxury realtor who works with those developments, and he says that these 4 or 5 million houses quite often have nothing inside because people living inside are broke because they mismanage their finances. They saw money coming in, but they forgot to plan for other things, and then it takes just one crisis, one big expense to leave them with nothing. So I definitely see it every day when houses go in foreclosure here locally. So it's kind of interesting to observe, actually. Give us a story. What shocked you the most when reviewing a successful business owner's finances? Obviously, don't give us names. let's keep it confidential, and I'm sure you wouldn't disclose it.
No,
But
no.
was there a case where you thought, wow, this person built a great business, but their financial plan is a mess?
Yeah. I mean, there's a number of different situations that we come across. And this is why I'll go back to my earlier comment. Nobody wants to be financially undressed. I don't broadcast that I'm working with anybody. If somebody finds out that you and I are working, it's going to come from you, not me. I'm not here to judge, but I have come across new clients or prospects. They make really good money. And then when we get into the details of what have you done so far? What is in your savings? What have you done for retirement? What do you have for insurance? Do you own property? All of a sudden, we get to the bottom line and there's nothing there or very little there. And it begs the question sometimes, and I can't really say it, but it's like, where's all the money? What are you doing with it? And that's why when we're doing financial planning, we do get into the budgeting. We do get into the cash flow. You have to know your numbers. Again, making $1 million is great in revenue, but if you don't have anything to show for it, what happened? Now, again, you could be starting your business. You could be investing back in your business. That's great. You still have to pay yourself. That's the first thing you should be paying is yourself, and automate it. And start small, but start doing something so that you don't wake up in 5 or 10 years and say, boy, I wish I would have started sooner, which is everybody's problem.
No, absolutely. And I think I see it among, so especially kind of women. I'm not sure why, or maybe it's just my experience. I have a number of girlfriends who are a small business owner and don't have a financial advisor or financial planner. And it always surprises me because I'm not great at not managing money, investing money. I'm not, I don't follow financial markets. It's not my area of interest at all. And I better leave it to professionals. And that's fine too. You need to know the weaknesses, and then I pay someone else to do these things for me, which is absolutely fine. But they feel embarrassed to go to a financial advisor and say, well, I appear to be successful. I'm driving a nice car. I live in a nice house, but I only have $200,000 savings. Look like it's better than nothing. Statistically, a large portion of Americans don't have more than 5,000 in their savings accounts. So I always encourage them that it's a start, and now is the time to start accumulating wealth and really seriously thinking about it. What would be your advice to someone who may feel that they are kind of like a little bit small fry at the moment for someone of your caliber?
Nobody should think that they're a small fry. Okay, wherever you are in your career, and you alluded to beginning, this particular question about a lot of your girlfriends and women. There are a lot of financial advisors out there who are women that will work with women. Now, I have a business partner. She's a female. Just had a meeting earlier today with a husband and a wife. The comfort level of that conversation was almost 100%. Why? Because the wife sees another woman in the room. So some women don't like to work with male advisors. I get that. I don't know why that is. There probably are some reasons. But I have a female business partner. You can talk to her all day long and leave me out of it. That's fine. But I think the apprehension about being discovered that, I haven't done anything, is real. But when you find the right advisor, you have the right relationship. And it is a relationship. We're not about transactions. We're about building relationships. I don't want to just do a piece of business and never talk to you again. That's not how I want to operate. But neither is my business partner. So find a person that matches what you want. And if that means you have to talk to 2 or 3 advisors, talk to 2 or 3 advisors. But get yourself in front of somebody and make a decision so that you can ultimately start doing what you want to do with your money.
Yeah, no, absolutely. Actually, I find it a fascinating phenomenon that people prefer male or female advisors, or advisors of certain age. I always go for people who are similar energy to myself. For me, it doesn't matter whether it's male, female, whoever makes me the most money. If I hire a private chef, I want someone who can cook well. If I work with financial planner, I want someone with good track record of results and someone I trust. And for me, it makes no difference. But yes, I heard some comments that some people prefer a male or female financial planner. So it's kind of interesting. Something else, going back to how we can save money, not just multiply our money, and thinking about, I hear a lot of business owners today say they want to stop tipping Uncle Sam. So what kind of 3 actions should they take before the end of this year to reduce their tax liability where possible, legally, obviously?
Of course. So, we're getting close to April 15th. There's not really a lot of time left. But one of the things, if you haven't filed your return yet, please go through your credit card statements, your bank statements, look at all your receipts, make sure you're accounting for everything possible that you spent money on that was for business. Hopefully your CPA is telling you that, number 1. Number 2, it's too late to set up your entity structure for last year. Make sure you have the right entity structure for 2026 and going forward. So if you're a sole proprietor, but you have a good profit, maybe your income level is that $400,000, but you're a sole proprietor, you need an S corporation because you're paying all the self-employment tax on that $400,000, and there's no federal tax being taken out. That's a big tax bill. Third, if you haven't set up a retirement plan at this point, you can still set up a solo 401k. You can still do a profit sharing contribution, and you can still do a defined benefit plan contribution in 2026, but it counts for 2025.
Oh, interesting. What
you
is
just have to do it. Yeah, you just have to do it before you file your tax return. And don't wait till April 14th because there's not enough time to get everything set up at that point. If you're on extension, different story. But those are three things immediately that I see that people need to get done, and we're working on 2 or 3 of them, as we speak right now, to help them save on their taxes. Because all that money that you're putting into your 401k, your defined benefit, or your profit sharing, that lowers your taxable income. It's a smart thing to do, assuming you have the money to put in there.
So it sounds like you work very closely with your clients' tax accountants as well, right? Probably hand in hand.
Yes.
Okay.
Yes. And I'm always referring people to a CPA. I've done it 3 times this week alone because people are looking for a CPA that's more proactive than the one that they have.
Well, I'm in the same boat. So thank you. I actually know someone you recommended to me. So thank you for recommending him. And I will be, looking to change tax accountants for 2026 as well.
Yep.
Final question. A business owner sits down with you for your Ask Frank Anything call. I know you offer them, and it's a playful but fun but meaningful way to engage with new potential clients. What uncomfortable question should they ask you if they wanted the truth about their finances? So what's the question to ask when you sit down with a new financial planner?
If they're going to ask me questions, I would expect them to ask me, number one, why should they work with me? That would be one. What experience do I have in working with people like them? So obviously I have a niche of attorneys. I love working with attorneys. My colleagues think I'm kind of crazy, but I get along with them. They love the kind of work that we do, and they're good people, and they become my friends. The third question is if Frank, if you take a look at my past, my history, and what I've done, are you going to tell me what I want to hear, or are you going to tell me what I need to do? And I'll answer that right now. 9 out of 10 times, I'm going to uncover something that you need to do. It's just the way it is, right? Because I don't focus just on investments. I don't focus just on insurance. We do the whole picture. I'm going to tell you where your gaps are. It's up to you to fill them. And please don't get mad at me if I find a gap that embarrasses you. You hired me to do your planning. You hired me to look under the hood, so to speak. I'm going to find something that you need to address. When you address it, that's your call. The sooner you address it, the sooner we can get rid of the problem.
Thank you. Well, thanks for answering my tough questions. And if you don't mind, I'll ask you a couple of personal questions because Frank Rekas is always online, on internet, on LinkedIn, everywhere as a composed, badass professional who knows what he's doing. Is quoting Harvey Specter on LinkedIn, which we love. So I definitely follow your LinkedIn account very closely and love it and enjoy it. Who is Frank behind the scenes? I know you have a daughter who recently got engaged. Congratulations. And there is a wedding coming up, which is probably a, mixed blessing, financially different from emotionally. But what else do you like doing in your personal life? Do you play golf? Do you raise guinea pigs? What is happening?
Well, besides being a dad, and I love being a dad, that little girl she's my sunshine. It's probably the best thing in my life that I've ever done. I love sports. I used to play some baseball. I'll still play if there's a pickup game or softball. I love going to watch baseball. I love hockey. I don't play. I can't skate very well, but I love watching hockey. I love to travel. I love going to different and new cities. I've found that I can even work when I'm away from home when I want to. I get up before anybody else gets up, so I'll do some work in the morning and then get on with the rest of the day. I'm a foodie. I love to eat. I love Greek food. I am Greek, so that would be pretty obvious to do that. And I just love to see different things. I love the mountains, so I'm a big fan of Western Canada, like Vancouver, Calgary, Banff. If you've ever been to Banff, you got to go to Lake Louise, one of the most beautiful places in the world. I don't play tennis. I don't golf. I don't do any of that stuff. And I can't swim. Believe it or not, I live in Florida. I cannot swim.
You and I both. That's my party line. I always say I'm a dog person with city cats, and I'm a diver. I'm a licensed diver, but I cannot swim. I never learned to swim. Same.
Yeah.
We need to start taking lessons, though. If there is a tornado or anything coming up our way, we need to be able to survive. Since we are based in Florida, we need to do something about it. So that's our goal for 2026, to learn to swim or buy a life jackets. That's,
Yeah.
that's what I'm going to
If
do.
you and I are, if you and I are the only two on a boat, we're in trouble.
Absolutely. Well, no, I'm marrying a former lifeguard in May, so I'm good.
All right, great. That's good to know.
Absolutely. We take him with. Well, thanks so much for your time, Frank. It's really good to have spent these 20 minutes with you, and great insight. I actually took some notes, and I look forward to challenging my tax accountant on Monday, discussing these things with him. So thanks for highlighting. It's such a timely conversation to have. So I hope that our viewers, readers, listeners will benefit from it.
Well, thank you for having me. I appreciate the opportunity and love being on the hot seat.